Hello, Circle of Nine community. This lecture is going to be about Ash Wednesday, weekly session time model series. Ash Wednesday is essentially aligned just like Model 110 in the New York session. It is often a market maker model for the weekly session. Now we're going to observe the weekly candle, how it interacts with the previous weekly candle, and we're going to observe open, high, low, close concepts for this specific model, and the power of three: accumulation, manipulation, distribution. Why is that the case? Well, in most occasions, this concept and these concepts can be applied to other weekly session time models, but more often than not, Ash Wednesday is the one that forms the high or the low of the week. And it will be very telling if there is time distortion. So when there is consolidation during this model, then that should give you an insight as to what will occur for Icarus, which will be a different lecture. Note, if you are trading Forex, crypto, or futures, if there's an SMT with the instruments that you're trading, so if you're trading NASDAQ or S&P 500, if there's an SMT in one of the intervals, which I will show, then it's going to be a high probable entry. Now for stocks, it's going to be a bit different. There's going to be no SMT, so you're simply going to have to observe price, and you're going to have to observe it at an exact time, which we will get to. Now, for the weekly session, the whole interval for Ash Wednesday is the 0.36 to the 0.5625 time fib interval for the circle of 9 fib numbers. And again, Forex and crypto, you're going to align it from 5 p.m. Sunday to the following 5 p.m. Sunday. It's going to be different from stocks. It's going to be slightly different from futures as well, as we talked about in previous lectures. But occasional scenarios, and more often than not, you will see time distortion in this model. And that should not alert you. If you are scanning stocks and you're an options trader, then that should be an alarm. It should give you an insight, as I mentioned, to what is to come. So you're to expect expansion thereafter the time distortion occurs. The other scenarios are going to be a continuation simply of Aries. And we'll show a few examples of that. And a reversal of Aries. So if Aries is moving towards buy side, for example, occasionally if you reach a higher time frame level, maybe external liquidity, buy side or sell side, you can see a reversal for Ash Wednesday. And it doesn't have to be an actual external liquidity level, like buy side or sell side. It could even be the open, high, low close of the previous weekly candle. So we'll talk about that as well. Now, the most important for Ash Wednesday time confluences for the New York session. So if you're trading intraday and you're day trading, then the more probable time models are going to be Model 1001. This is a typo. It should be Model 110, and then or Model 111, and then Model 110. So Model 1001, Model 111, and Model 110. These three are going to be the most high probability New York session time models for this time slot throughout the week. And we'll talk about the exact timings of that in a couple of examples. Our first example is going to be Bank of America. Now, we have a random week in January to early April. Here we have the weekly session time models drawn, and Ash Wednesday is in between. As we talked about earlier in the lecture, occasionally, and in most cases, this is very similar to Model 110 for the New York session. If you're well aware of that model, then you would understand that on most occasions it forms a market maker model. So a market maker sell model or a buy model. Now, the key aspect is you need a key level on the higher time frame. So if we zoom out for Bank of America, we have our key buy side level that was formed on January 5th. Price has been in a bullish structure for this market maker buy model down here. And it proceeds towards that buy side level until it gasses out. And by gas out, I mean the volatility decreases towards the end of Aries at that certain point. And now we're in Ash Wednesday territory. From here, notice the range is rather small. What can we expect for the next time model? Icarus, further expansion. Now, price has taken out buy side. Perhaps this is a very bullish structure and maybe we can look for an opportunity to long. However, if you look at the higher time frame, on the 1 hour, for example, you would note price has shifted. What do I mean by that? Well, it's simple candle structure. This candle on the 1 hour takes that high, remains bullish up until this next candle. The entire body engulfs almost the entirety of the previous body candle, and it closes, as I keep mentioning in previous lectures and occasionally during live sessions, it closed beneath 50% of this candle on the 1 hour. So price is shifting towards sell side. Now this next candle might catch many off guard. However, when it comes to time and price, we take out buy side. What is the more highly probable scenario? That we then attack sell side. And then if we go to the 5 minute, you can see the type of entry we can achieve using the root candle. So the root candle is always going to be the 0.1125 fib, 4 weekly sessions. Notice the amount of time it gives you. Goes into premium, and this is the absolute best entry. Root candles, as I keep mentioning, give you the absolute best entries, depending on your analysis. And time will tell you if you're wrong or you're right. Because notice the 0.36 time fib, it starts distributing down. So if you were trying to long here, maybe you were trading in the classic resistance turn into support idea. However, what are institutions going to do? They're taking stops out there and they're going to drag it back down because they're trying to fill their liquidity. So time will tell you if you're right or wrong. Notice here, it's distributing down. Maybe you're looking for a push up here. Maybe you're trying to inverse this SIBI right here. I'm going to draw it just so you guys get the picture. But time is going to tell you right away if you're right or wrong. It's not pushing up. So at that point, you should really think about where it's going to go, especially if you're doing a swing. But this is a perfect example of how it is very similar to Model 110 and a market maker model. Ash Wednesday tends to do that. If not, then I will show a scenario where it's going to be a continuation of what Aries is doing or a reversal. Here we have Apple on the 5 minute chart. We have our weekly session, right? This is our entire week right here from Tuesday. There was no Monday on this week, and I think it's a great example of that. No Monday on this week, so where do we put the time fib when it comes to stocks? 9:30, Tuesday, to the following Monday, not Tuesday, following Monday. So that's an entire weekly session. Now, if I highlight certain areas, you can see Iscariot, the fake out move. You can see Aries, quite the move there. And then what does it do over here? Generate some buy side. Maybe that's going to be tagged later. We go back to what? Iscariot root candle. Price then gives you an opportunity to long based off the Ash Wednesday root candle, and even more so, Iscariot root candle. Now at this point, Notice the market maker model here. Yet again, I mean, this is a reversal of Aries as it's distributing down towards the end of Aries. But it is essentially a market maker buy model. And notice the timing of everything. I know at this point it's no surprise and most of you are already used to it. But notice the entry between the 0.36 and 0.5625 time fib goes beneath Iscariot at that exact time, forms the market maker buy model, inverses this 5-minute SIBI, so that can be your entry. And then notice what happens after the 0.5625 fib. Pushes into market close. Next day, you see a gap up, slight wick down there. And notice the fractal nature now. So we talked about earlier in the lecture how some time models have higher probability. We also talked about that for Aries. Notice the timing of this move here. Thursday, February 22nd, 2024, Apple. Notice the time on the bottom, 11:10. What time model is that for New York session? Model 110. As we talked about earlier in the lecture, Model 110 is going to have a higher probability of occurrence on Thursday. Obviously, you're going to need to create more data to it, and I will release that at a certain point. But in a very basic manner, look at this push right here and continuation. Model 1001 is then used for continuation towards buy side. So more often than not, don't overcomplicate it, but more often than not, if you try to swing calls or puts, maybe if you're swinging puts, it'll look like this, right? More often than not, there is going to be a gap down or a gap up for stocks, and some form of buy side or sell side is going to form until Model 110. Either Model 11 or Model 110 in most occasions. Then the move is going to continue. This is a perfect example. So you see a push up. This is bullish. Pushes up, gaps up, pushes down, creates buy side, Model 110, then continues that reversal. So there's many opportunities and many chances to utilize all these time session models for the week. Ash Wednesday, right here, created a perfect opportunity for a reversal of this past price action, this buy side that got created for Aries. Perfect opportunity to take that out using Ash Wednesday. Now let's look at an example for continuation of Aries. Then we're going to talk about how to utilize weekly candles. Here we have January 8th to January 16th. There's no Monday the following week, so I'm going to place it on Tuesday, and I think it's just another great example just to ingrain that in the mind when it comes to stocks. If there's a missing day, you're going to have to adjust. But notice it's scary out here. There's quite a significant push. Aries then has a gap down. Blood will be shed. Look at this opportunity long here. That's no surprise for Aries. Inverts the SIBI at this exact time right here. Gives you an opportunity to long. This candle tells you it does not want to close beneath that anymore. Perhaps you're looking at a BPR, balanced price range. But don't confuse yourself with all these terminologies. Just keep it basic. This looks bullish. It's V-shaped recovery. Just very simple. V-shaped recovery. And you're going to want to see continuation thereafter. So then price stalls out, right, for Aries. And then look what we're anticipating now for Ash Wednesday. We're anticipating a further move up and continuation of Aries because price was bullish down here. lot of consolidation, right? You can either wait for this opportunity right here, 0.5625 fib, or you can wait for the end of Ash Wednesday. But volatility will be injected during time distortion. If it has time distortion beforehand, it's going to be injected at the 0.5625 or the end of Ash Wednesday. In this case, it was the 0.5625 time fib. Now, notice the root candle gives you an opportunity to long. This entire area right here is in discount. Pushes up, stalls out, and then Icarus occurs thereafter, and more time distortion towards the end of Icarus. But here, it's just a continuation of Aries. So, just like Model 11 in the New York session, let's say there's a reversal, there's a V-shaped recovery. Pretend this is the New York session. This is your Judas, Model 11. Pretend there's some candles here. Gaps, not necessarily gaps, pushes down towards sell side, and there's a V-shaped recovery below the 1034 root candle, right? And it starts pushing up, and price is creating some buy side. In that case, what would you do if you were in Model 110 territory? You would probably look for a move towards buy side, because look at all this buy side right here. And maybe you're deep in the range and you're in discount for the range and you're looking for a move. The same thing for weekly session time models, because time and price is fractal. Do you see how the nature of that is portrayed here? Judas, Model 11, Model 110 continuation. 3 and 6 is used for continuation, and then you see the drop for Icarus. So this is a perfect example of continuation. Okay? Now let's look at how to utilize weekly candles in order to create a bias for ourselves for the week. So let's say that we're on the weekly chart for the NASDAQ right now. Let's say we're observing the weekly candles. Here, we're at all-time highs, but the analysis remains the same. Noting the weekly candles, what are we going to do with the open, high, low, close concept? The high was here. The low was here for the previous candle. And the open down there and the close was up here. So then we wait. Maybe we're looking for a bullish move and the high gets taken out. So the same concept that I'm about to talk about can be used for this week. But let's assume now we're observing this week and it has closed with a bearish candle. Key idea, it closed beneath 50% of the body of the previous candle. So it closed down here. So what can we expect now for the following week? We can expect a move down. That's going to be our bias for the following week. So what are we going to do? We're going to mark the high and the low, the open up here, and the close down here because it's a bearish candle. And these are going to be our main levels. The same concept can be applied to Forex, crypto, and stocks. But now we're going to dive deep into the weekly session. We have regular trading hours on. So now I'm going to draw Monday, 9:30. To the following Monday. So keep in mind these levels here. I'm going to make this blue now. This is the body. This is the high and the low of the previous week. So I'm assuming many of you already understand that. It's simply, let's keep it simple. It's just the previous week low and previous week high. And now we can anticipate a move down to take out this low because price has shifted on the higher time frame. So now we're going to be using our weekly session time models for a potential entry. But we're going to look for an entry somewhere up here. This is the best area for an entry. Why? Because it's going to be above 50% of the body of the previous candle. And if we can then enter up here, it would be even more optimal, okay? So let's see what happens. We're on the hourly chart. Price gaps down on Monday. Iscariot. Let's go to the 5-minute now. So you can see how Iscariot's being used. Aries then takes out that buy side, pushes up. Now we're in Ash Wednesday territory. We're entering premium of the weekly candle. So anywhere up here, we're going to want to short and look for short opportunities. Maybe we're going to look for an SMT with the S&P 500. But now we're going to draw our root candle, see if it gives us an entry. That's the open of the root candle. So I'm going to label that so as not to confuse ourselves, because we have a lot of horizontal lines now. And I'm going to look for an entry with an SMT. Right here. Look for an SMT. Look for a higher time frame inefficiency. It's very simple. Look at that 4-hour fair value gap. I have regular trading hours on, but notice the gap down on Wednesday, 9:30. Why? Because we're looking at premium for the previous weekly candle. And if I were to show you what this looks like on the current week, as well as the previous week. So this is the previous weekly candle. This is the current week right here. And watch how it forms. So I'm going to backtrack it a little bit before that gap down. Looks pretty bullish, right? But remember the structure of the previous weekly candle. It was bearish. We're looking for short opportunities to take out this low down here. Now, Ash Wednesday is giving us that market maker sell model. Look at this juicy sell side from Iscariot. Look at that. And we got taken out. You put 2 and 2 together. There's your gap down. Ash Wednesday opportunity for premium of the root candle. Some time distortion. What can you expect for Icarus? What can you expect next? We talked about time distortion. Get ready. Do you see it now? The high of the week was formed during Ash Wednesday. Doesn't look very clean because I'm on regular trading hours on, but this is your market maker sell model yet again. Notice the level here. It bounces off 50% of the previous weekly candle or the body low. And then what happens after? Pushes. What can you expect for the end of Ash Wednesday because price is bearish now? Distribution and volatility to be injected. And the root candle gave you that perfect opportunity. Another draw on liquidity. Iscariot root candle. More often than not, price is going to push back down towards that root. Did it for Aries, did it again for Icarus, and is playing around with that specific candle way over here. Okay, so we have all these levels marked out, but the key idea here is using the weekly candles for our bias for the week, looking at liquidity throughout the week. Notice what the time models are doing. If there's time distortion, you need to anticipate expansion. It is really that simple. I hope this video helps, and I hope it sheds some light on the weekly profile, market maker, sell model, and buy model opportunities that Ash Wednesday presents. God bless.